Hey everyone, welcome back to Corporate Decoded, the place where we translate all the corporate jargon into plain English. And today, oh boy, do we have a financial filing that is going to make you say wow. Or maybe, let's just say Northern Lights Fund Trust, the C, has released its latest report and it is packed with numbers and strategies that might just surprise you a lot. Alright, so we are diving deep into a big financial report from Northern Lights Fund Trust II for the period ending the 30th of November 2025. This isn't just any report, it is a certified shareholder report for investment companies, and it talks about several North Star funds. Think of it as a detailed checkup for these investment funds that aim to grow your money. We'll be looking at how they performed, what costs you might encounter, and what they invested in. First up, the North Star Bond Fund for the year ending the 30th of November 2025. This fund had a positive return of 3.64%. Now that sounds okay, but it actually fell below its benchmark, which is like its target or comparison. They say interest rates barely moved for their short duration portfolio, which is good for stability, but the yield on the 10-year treasury went down a bit. Short-term rates fell faster, leading to a steeper difference between longer and shorter-term rates, a shift not seen since early 2022. The good news here is they had no major problems with any of their investments. Looking at the performance over the last 10 years from November 2015 to November 2025, the North Star Bond Fund started with $10,000 and ended up at $12,829. That might seem a bit slow compared to its benchmarks. The Bloomberg US Aggregate Bond Index did a bit better, ending up at $12,178, and the High Yield Index grew to $17,698. So, while the bond fund made money, it did not keep up with the others. In terms of average annual returns for 1 year, the bond fund returned 3.64%. For 5 years, it was 2.15%, and for 10 years, it was 2.52%. This shows a consistent but modest growth. The US Aggregate Bond Index had better 1-year returns at 5.70%, but struggled over 5 years with a negative 0.31%. The High Yield Index was a strong performer over all periods. Digging into the fund's stats, as of the 30th of November 2025, the North Star Bond Fund had net assets of over $35 million. It held 36 different investments. The total advisory fees paid out were around $287,733, and the portfolio turnover rate was 34%. This means about a third of the fund's investments were bought or sold during the year. Looking at what the North Star Bond Fund invested in, for the most part it was in corporate bonds at 74.2%. Then came preferred stocks at 11.6%, and US government and agencies at 6.3%, with the rest in money market funds. This shows a focus on corporate debt, which can offer higher returns but also carries more risk than government bonds. When we look at the sectors, the money is spread across consumer discretionary is the largest at 37.7%. Financials follow at 17.2%, then industrials at 9.6%, and real estate at 8.9%. US Treasury obligations make up 6.2%, and money market funds 7.8%. It is interesting to see a big chunk in consumer discretionary, as that is a sector that can be sensitive to economic ups and downs. The top 10 holdings give us a snapshot of the fund's biggest bets. Leading the list is a money market fund at 7.8%. Then we see several US Treasury bills and various corporate bonds from companies like Oceaneering, International Scots, Miracle-Gro, and Wendy's. Having a money market fund and treasury bills in the top holdings indicates a focus on liquidity and safety for a portion of the portfolio. Now let's switch gears to the North Star Dividend Fund. This fund declined by 6% for the period ending the 30th of November 2025, significantly trailing its benchmark. The report mentions that dividend-paying stocks are sensitive to interest rates, which is a key factor for income-focused investors. They expected interest rates to go down in 2025, but concerns about tariffs tempered that expectation. A big reason for the underperformance was Flexsteel Industries, a furniture company. Utilities, financials, and REITs, which are real estate investment trusts, also didn't perform well. However, some defensive income holdings and companies with strong balance sheets did well, like Oil Dry Corp and Sprott Inc. Over the last 10 years, a $10,000 investment in the North Star Dividend Fund grew to $17,890. This is quite a bit less than the S&P 500 index, which grew from $10,000 to $39,175. The Morningstar US Small Value Index also performed better, ending at $22,674. This highlights how the dividend strategy may not have kept pace with broader market indexes. For the last year, the dividend fund was down 6.01%. For 5 years, it returned a respectable 5.47%, and for 10 years, it showed an average annual return of 5.99%. This shows that while it had a tough year, over the longer term, it has provided decent returns, although still trailing the S&P 500 significantly. The North Star Dividend Fund had net assets of over $83 million. It held 53 portfolio positions. The advisory fees for this fund were quite substantial at around $864,299. The portfolio turnover was 14%, meaning it was much more of a buy and hold strategy compared to the bond fund. This fund is heavily invested in common stocks at 98%, preferred stocks make up 1.2%, and money market funds a small 0.8%. This is typical for a fund focused on growth and income from equities. The sector breakdown shows a significant allocation to financials at 21.0% and utilities at 21.2%. Consumer discretionary comes in at 24.2%, followed by energy 5.0% and materials 5.0%. The strong weighting in financials and utilities is often seen in dividend-focused funds, as these sectors historically pay stable dividends. In the top 10 holdings, we see companies like Sprott Inc., Oil Dry Corporation of America, and LSI Industries Incorporated. These companies are likely chosen for their dividend-paying capabilities and stable cash flows. Moving on to the North Star Microcap Fund. This fund underperformed its benchmarks for the 12 months ending the 30th of November 2025, posting a 5.8% decline. It was a year of big swings, with some companies like Alliant Incorporated and Seco Environmental Corporation soaring over 100%. On the flip side, Verco Manufacturing and Apogee Enterprises fell by over 50%. Some holdings in technology, consumer, and industrial segments faced challenges due to tariff supply chain issues and uneven demand. Despite these difficulties, most companies maintain strong finances, reinforcing confidence in their long-term prospects. Looking at 10-year performance, a $10,000 investment in the North Star Microcap Fund grew to $21,705. Again, the S&P 500 index was the clear winner, growing to $39,175. The Morningstar US Small Value Index ended at $22,674, which means the Microcap Fund slightly underperformed this small value benchmark. For the last year, the Microcap Fund was down 5.77%. Over 5 years, it showed a return of 4.22%, and over 10 years, it boasted an impressive 8.06% average annual return. This higher long-term performance could be due to the higher risk and potential reward associated with microcap investing. The North Star Microcap Fund had the largest net assets among the funds discussed so far at over $110 million. It held 53 investments. The advisory fee was a substantial $1.1 million. Its portfolio turnover was 24%, suggesting a moderate approach to trading. This fund is invested primarily in common stocks at 90.7%, with money market funds making up 9.3%. This large allocation to cash in money market funds might indicate a defensive stance or a reserve for future opportunities. The sector breakdown is heavily tilted towards industrials at 25.0% and consumer discretionary at 44.0%. Financials are at 3.8% and technology at 5.2%. This concentration in industrials and consumer discretionary suggests a focus on companies that drive economic activity. The top holdings include the First American Treasury Obligations Fund at 9.3%, followed by United States Lime Minerals Incorporated and Green Brick Partners Incorporated. The large allocation to a money market fund is noteworthy here, possibly for tactical reasons or as a way to manage volatility. Next up, the North Star Opportunity Fund. For Class A shares, this fund generated a 7.3% return for the year ending the 30th of November 2025, lagging behind its benchmark. Their technology holdings did very well, with Advanced Micro Devices and Alphabet Incorporated seeing significant gains. Small caps like Sphere Entertainment and Orion Energy Systems also posted strong returns. However, the biggest detractors were private equity companies Blackstone Incorporated and KKR and Company Incorporated, which have been long-term winners. The consumer discretionary sector had mixed results as lower-end consumers struggled. The fixed income part of the fund, 25% of the total, was mainly in short-term treasuries, which performed as expected. Looking at 10-year performance, the North Star Opportunity Fund started with $10,000 and ended up at $20,284. The S&P 500 again was the leader, growing to $39,175. The S&P Target Risk Aggressive Index also outperformed at $25,231, and the S&P Target Risk Balance Index was at $21,440. For the last year, the Opportunity Fund had a return of 7.28% without a load and 1.13% with a load. For 5 years, it was 5.30% without a load and 4.06% with a load. Over 10 years, it returned 7.96% without a load and 7.33% with a load. These returns are decent, but consistently below the S&P 500. The North Star Opportunity Fund had net assets of over $137 million. It holds 50 positions. The advisory fee was quite high at over $1.1 million. The portfolio turnover was 25%. This fund is composed of 72.8% common stocks, 13.8% US government and agencies, and 10.0% corporate bonds. Preferred stocks and convertible bonds make up smaller portions. This mix suggests a strategy that seeks growth from equities while also having a significant allocation to fixed income for stability. Consumer discretionary leads the sector, weighting at 20.9%, followed by financials at 17.4%, and technology at 18.4%. US Treasury obligations are at 13.7%. This diverse sector allocation suggests a broad approach to finding opportunities. The top holdings include US Treasury bills and large cap companies like Alphabet Incorporated, Advanced Micro Devices, and Apple Incorporated. This mix of short-term government debt and large growth stocks shows a balanced approach towards capital appreciation with some defensive positioning. Finally, we have the North Star Small Cap Value Fund. For its institutional class shares, this fund posted a 5.50% positive return for the 12-month period ending the 30th of November 2025. Top performers included Comfort Systems Incorporated and Sprott Incorporated. There were no major detractors, although some companies saw declines. Real asset holdings and semiconductor-related exposures faced pressure. However, most portfolio companies maintained healthy cash flow and conservative balance sheets, positioning them well for future earnings growth. Looking at performance since inception in December 2018, a $100,000 investment in the North Star Small Cap Value Fund grew to $210,867 by November 2025. This is a solid return. The Morningstar US Small Value TRUSD benchmark returned $207,156 over the same period. However, the S&P 500 index was far ahead with $305,186. In terms of average annual returns for 1 year, the fund returned 5.50%. For 5 years, it was a strong 13.38%, and since inception, it has averaged 11.39%. The 5-year and since inception returns are very competitive, especially when compared to its small value benchmark. The North Star Small Cap Value Fund had net assets of over $31 million. It holds 48 investments. The advisory fee was quite low at around $74,234. The portfolio turnover was 23%, indicating a buy and hold strategy. This fund is almost entirely invested in common stocks at 97.9%, with money market funds at 2.1%. This is typical for an equity-focused fund. Industrials represent the largest sector allocation at 33.8%, followed by consumer discretionary at 20.2% and financials at 14.8%. Technology is at 8.3% and energy at 7.1%. The significant weighting in industrials is a key characteristic of a small cap value strategy. The top holdings are Comfort Systems USA Incorporated, Sphere Entertainment Company, Sprott Incorporated, and As Incorporated. These are all companies that likely fit the small cap value profile with solid fundamentals and potential for growth. Now let's talk about the big picture. The Board of Trustees for Northern Lights Fund Trust reviewed and renewed the investment advisory agreements for these North Star funds. They looked at the nature, extent, and quality of services provided by North Star Investment Management Corp. They also examined performance against benchmarks and peer groups. For the North Star Opportunity Fund, the board noted underperformance across various periods but concluded it was acceptable. The Microcap Fund showed mixed performance but had strong long-term returns. The Dividend Fund also underperformed its benchmarks over longer periods. The Small Cap Value Fund generally outperformed its peers and benchmarks, although it lagged the S&P 500. The Bond Fund outperformed its benchmark but underperformed its peers. When it came to fees, the board noted that the advisory fees for most North Star funds were near or at the high end of their peer groups. For example, the Opportunity Microcap and Dividend funds were charged a 1.00% advisory fee with a reduction for assets above $100 million. The Bond Fund's 0.85% fee was also above its peer group median. However, North Star agreed to waive or limit expenses to keep net annual operating expenses within certain percentages for each fund and each share class. For example, the Opportunity Funds class of shares had a net expense limit of 1.55%. These expense limitation agreements were seen as beneficial to shareholders. So what is the story here? These North Star funds are managed with different strategies from bonds to microcaps. While performance varies and some funds lagged their benchmarks over the last year, longer-term returns for some, like the small cap value and microcap funds, are quite strong. The fees are noted as being on the higher side for some funds, but expense limitations and waivers are in place to mitigate that for shareholders. It looks like the management team is actively monitoring performance and costs, which is always a good sign. The report details a lot of careful consideration by the board regarding the advisory contracts, showing they are keeping a close eye on how these funds are run. What are your thoughts on these funds and their performance? Do these numbers influence how you think about investing in them? Let me know in the comments below. If you found this breakdown helpful, please hit that like button and subscribe for more corporate deep dives. And don't forget to join our Discord community linked in the description for more discussions and insights. Thanks for watching and see you next time on Corporate Decoder.